but earnings and lots to digest. So let's welcome on board Ashish Bhandari then. Ashish, hi, good morning. Good to have you on the show and good set of numbers from you this quarter. The order booking has been muted though. Do you foresee higher order inflows, execution in the next few quarters now that elections are behind us?
Aisha, you put it right. We do expect improved orders, and we are already seeing that in the first month that went by, and we expect that trend to continue. We did have a relatively soft February and March, especially certain sectors, ethanol in particular, was relatively weak, but some of those sectors are coming back after the elections.
A sale loss, could it be recovered or a sale loss is forever?
No, the sale loss can be recovered because in many cases we have the orders, but we can't book them until we receive the advance, which means the project should financially close. And there were many people for a variety of different reasons who were waiting to financially close their projects. And in some cases, there was also a little bit of dependence on specifically back to that ethanol bit that I spoke about, around how policy would play out and whether the marketing contracts that those projects at the back end depend on, how they become, how they get fruition. So some of that was there. It wasn't exactly sale lost, it was just sales delayed.
So Ashish, what's the visibility on the total order book? How much do you think you're going to clock in up until the year end, and which segment really is the order inflow coming in from?
So look, the sectors, and I've been traveling across the country over the past few months, and almost every city that I've gone into where I've met customers, there's reasonable bullishness across sectors. Yeah, and my last trip was to Raipur a couple of weeks ago, where the entire rice segment and the sponge iron segment, almost everyone that I spoke with was saying they all wanted to invest, add capacities, do newer things. So in general, the bullishness in terms of, and I wouldn't say it's crazy like 20, 30%, but good teens kind of growth is what is steadily being seen across segments. Beyond this, I would say then you come to the bigger projects which are in steel, where we have seen continued push-outs, but we are seeing now that maybe in the next couple of quarters, some action will happen on some of the bigger projects. And then the big kind of 800-pound gorilla in the room is the entire thermal sector and how that evolves. We will see some evolution on some of those projects through the year as well.
But for a business which is growing at such a steady rate, margins have gone, let's say, from 7 to 10 and 10 to 6. For a business which is compounding in a steady manner, why is there so much of volatility in margin? 7 becoming 10 is not 3%, it's almost 25%.
I completely agreed. And in that sense, it was a quarter of, on both orders and revenue, of almost two separate stories. We have had two specific areas of our business where we have taken significant hits. The first is the bio-CNG business, which is a relatively new sector for Thermax, one that we continue to be very bullish about as a sector with significant long-term potential for India. In this sector, we had taken some projects where we, through engineering, came to the conclusion that we have to make changes to our design. And because those were changes we could not pass on to our customers, in this quarter, we have taken a 45 crores hit on the project side, which shows up in our numbers. Also, in a separate project that we are doing for NRL, which is again on kind of project execution, also there, and one other small one, we have taken another hit of about 20 odd crores. So which together have created a significant negative impact on the earnings. And in many ways, I'm actually proud that we could still turn out the earnings that we did despite taking what should be a one-time hit in certain sectors. I do expect our earnings to bounce back in the remaining quarters of the year.
That base number for Thermax, I mean, in terms of a long-term trajectory, are we looking at, let's say, a number between 10, 11, 12 or sub 10?
I've always said that think of Thermax as the four parts that we show our business in. The biggest part of our business currently is our industrial products, which has been a place where we have been steadily growing revenue, steadily growing margins. And that trend I expect to continue at least for this year. Yeah, and whatever we did last year, I expect us to do slightly better than that and continue to grow that business at a reasonable clip. Our chemicals business, which is our most profitable business, I expect that to maintain its profitability and do extremely well on the growth front as well. Green Solutions is the business that we are investing in, where one portion of our business, especially our renewables, wind, solar, hybrid business, is a relatively small business. It's a young business within Thermax. So that's a business that is seeing a fair bit of investment, but won't get profitable until next year. So we know what timeline that profitability will come about. And industrial infra, we have gone through a bit of pain. And we are seeing good strength in as the big projects come in. Even there, we expect to improve profitability. But all four of these businesses have got different growth trajectories, different drivers from a market perspective. And to me, all four businesses are very important to Thermax in their own independent right. So I wouldn't come and say there is a profitability target, but all four businesses I expect to continue to grow in their own individual, and whatever is the blended profitability will be the blended profitability. So kind of a longer answer to your simple question, but don't track Thermax profitability at the macro level. Each individual story is the one to track.
The four pillars which you spoke about, how many of these pillars in a sense are, according to you, likely to grow in late double digit or early double digit? Because if one of the pillar is slowing down, then aggregate margins would change, right?
I think all four pillars I expect to grow. Yeah, the question is on large projects and how those large projects come in. Because on the industrial infra side, those large projects have a way of moving the needle one way or the other quite significantly, as we have seen in the past as well. Yeah. So as part of these numbers, also some of the smaller trends get missed out. For example, our chemicals business, you would see, has done extremely well. It's our most profitable business, and now we are starting to show the growth story in that chemicals business starting to come in. These are not easily reversible. Once you are on that growth track, once those engines start to work, some of the newer businesses that you enter into start to work, you see that portion continue to perform at least for a period of time. So some of those things that are coming into play, I really, really like. The performance on our industrial infra business, especially surprising the market with a couple of these negative moves that we have had, which are one time, in my opinion, was something that was unavoidable, was a little bit of a surprise as well. But to me, I take strength that behind these numbers, our ability to enter into newer segments and do things that will drive long-term growth for Thermax, I really, really like.
And finally, before we wrap, one macro consistent red flag which we get from economists is that the private sector capex has not started, but it will start. Now, if the macro picture is the private sector capex has not started and yet you are growing, and if the private sector capex is about to start, then how would you benefit from that? I mean, that clearly means that the best in terms of the high octane growth is just kicking in for you.
I'll leave it to the economists in terms of how private capex would show up. Yeah, private capex, in my view, at least in many of the sectors that drive orders for Thermax, has been showing up for a couple of years now. We are post-COVID, and the strength that we have seen in, which I call in our industrial products group, which is across sectors, across geographies, we have seen strength. We have had reasonably competitive products in those spaces as well. So I've been seeing strength for some time. Can that go a notch higher if private capex comes in even stronger? I think so, yes. Where I would love to see more capex go in is in some of the bigger sectors which we keep talking about, especially the steel sector, the power sector, petrochemical, which is where some of the bigger numbers can come about. I would love to see more private capex coming into those sectors.
Sure, we would. And that's perhaps much the need of the hour as well. But Ashish, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you very much. Wish you guys a good day.